Give us your thoughts on the realistic path to a T+1 and then maybe eventually real-time settlement.
Yeah, thanks. First of all, thanks for having me on. Before we get into that, one of the things I did want to just explain is what is Apex, right? So we are the fintech for fintechs. The focus for the firm is to provide a platform. You mentioned Webull, folks like Ally, SoFi that sit on top of us and use Apex as its sort of platform to provide an investment solution. And we have roughly 200 and a little over 200 clients on Apex's platform. We support about 15 million end customers. And so to the point about the settlement cycle, I couldn't agree with Vlad more in that if you think about a trade done today for a retail customer, right, that trade does not settle until Monday, right? So T+2, that's the way that the settlement cycle works today. And this is the greatest financial system in the world. And the best we can do as an industry is settle trades T+2.
Well, I mean, there seems to be a little bit of progress there, Bill. And I mean, when you're talking about, I guess, individual stocks, particularly on a smaller scale like this, going to a same-day settlement makes a lot of sense. There has been some concern here about when you fold in options and some of these more complex instruments here, you do need that time to make sure that everything's copacetic and nobody's getting ripped off here. How do you make sure, as Apex, how do you make sure that whatever settlement we're at here, that when you have the two parties on these trades, that they're both getting the deal that they thought they were getting?
Yeah, look, that's a great question. And first of all, I'd say is, the focus for Apex, again, is around real time, right? Removing all the friction from the system. And so that settlement cycle today, you talked about options, equities. Think about the way a cryptocurrency executes and clears today. It's real time. So there is precedent out there when you think about cryptocurrency, and it's a safe, secure function by which people execute and hold cryptocurrencies today. The same concept could hold true for an equity or an option. The challenge that we have from an industry standpoint is the industry, right? When you think about big banks that are out there today, they're sitting on old infrastructure, right? It's a batch system. And so, yeah, there needs to be time to make sure things match up and pair up. But the biggest challenge that the industry has as it relates to getting to a more real-time world is more around the aging infrastructure of how these big banks work today.
Bill, let's talk about, as the companies that you service, you bring infrastructure to, the startups that then grow. How do you see them through their life cycle? Because as we just mentioned when we introduced you, you had a close relationship. You were there with Robinhood at the start, and then Robinhood decided to get its in-house clearing. What happens when these companies hit that sort of scale and size? Is it always that they'll go and take what you provide in-house?
Well, look, one of the things I'd say, if Vlad was sitting next to me today, the first thing he'd say is there would be no Robinhood today without Apex. And then the second thing he would say is what Apex does is really complicated, right? He took this on himself and had some challenges as it relates to it. And that's why there's a perfect marriage between us and our clients, right? So take somebody like a Stash. Their focus is on how to provide an amazing experience to the end customer. Our job is to effectively make that come to life, right, behind the scenes, and take care of all the rules and the regulations. And we talked about settlement cycles and open accounts in seconds with no paperwork. Make the process incredibly efficient. Allow them to focus on creating a great experience for the end customer, and let us take care of all the things behind the scenes.
Bill, it was interesting. We've had a lot of conversations with Robinhood, with Webull, and I'm curious if you can give us some insight into the conversations you were having with market participants in the height of the retail frenzy when, those platforms said that they didn't want to stop trading, but their hands were tied because the clearinghouse had raised their margin requirements. Can you just talk to us about how much those requirements were raised, and if there was any point that you were really worried about systemic risk in the system?
Yeah, so let's start with systemic risk in the system for sure, right? So, you go back to that day and you looked out at the major players out there, Schwab, Interactive Brokers, like you said, Robinhood, and there was pausing, right? People didn't understand what was happening. And, to give you some perspective, I've been in this business in the fintech world in and around custody and clearing for over 25 years, it was an anomalous thing, what was happening. And it's complicated because you're talking about the bowels of our industry, and you had names that had margin requirements that were in excess of the value of the stock, right? So think about this. You had a margin requirement from DTCC. If you owned $100 worth of GME that day, the margin requirement that was imposed upon the clearing firms was in excess of that amount, right? And pretty anomalous situation. Even if we go back to March and April of last year, tons of volatility in the market, you didn't see this type of activity, which was specific names that GME, AMC, costs that were really driving some really unusual, very unique activity in the market.
Talk about activity in the market. Just lastly, we've got to ask you about the SPAC that you're currently undergoing. Why go that route? Do you think it's still the best route to go public? Yeah,
look, this is about us. We continue to grow as a company, and there's so much opportunity for us. You guys saw the news about Walmart getting into the investing side of things. There's just an incredible amount of opportunity to continue to democratize investing. And for us, right, we're all about efficiency. We're all about removing friction. The process by which of the SPAC process was just a great opportunity for us to go from start to finish as efficiently as possible. And so our expectation is we'll IPO sometime, hopefully towards the end of May.